Markets around the world like to climb the wall of worry, but what happens when the smart money stops buying? That's what we've seen potentially over the last couple of sessions, and it's something we need to discuss today, including dark pool transactions. Also, retail sentiment, with yields absolutely charging back up after the core inflation reports and the 30-year bonds not finding the buyers that we expected. We just saw one of the biggest rate spikes that has happened over the last 2.5 years, and it needs to be thought about. So markets starting to look shaky, and of course, a bunch of structure that's pointing towards the potential of a new sell-off. Let's talk about it together. Well, welcome back everyone to the Daily Show where we talk about markets around the world. And of course, it was a sea of red through many sectors over the last 24 hours, but it was actually quite mixed. We'll get into what was going on the most. CBOT futures action. This is a chart that shows us the big changes that happened to the yield curve and therefore something we need to know over the next 1 year in advance. Basically, we're not seeing another rate drop early in March anymore. Now we've gone back to kind of thinking, oh, May, June, maybe we'll start to see a cut. And more importantly, they're starting to price in that the Fed will have another rate hike. Remember, they told us that in the minutes that they were planning on doing it. The market now says, well, maybe I believe you. What's happening here, though, is even more crazy. Have a look at the retail trading sentiment. 40% of us supposedly now think the market's bullish, only 23.5% are neutral, and 36.5% are bearish, marking a very strange point in time where we have a mixture of bearish and bullish people. But is it time for a pullback? It looks like it could be. And the reason why is quite simple. Too many people are feeling bullish about the markets, and that's changed our bull-bear spread to being back above 0%, which is pretty quick, I've got to say, in terms of change of sentiment here. Now, we mentioned before the 30-year yield, and before we get into the dark pool transactions, the indices, and all the key levels we need to be looking at, I want to just discuss this point. Have a look at this. Not since March of 2020 have we seen a one-day basis point hike in the 30-year like this. What a massive chart. And more interesting was the allocation. The allotted or allocated rate was 4.83% for 30-year bonds in the pre-sale instead of 4.8%. I posted this over on our Twitter X account, so look at the links in the description if you're interested in following along. We're always posting some of this stuff. It's probably not going to get any better because guess what? Next week, VIX options expiration. The same day, we have more government bonds coming out. So basically, we've got a whole bunch of volatility that could be coming through. Now, here's where things get a little bit spooky. What about Fridays? Well, it's Friday the 13th in America, and of course, that means that we might be having a bit of a spooky Friday. The stats here actually don't lie. They tell us that, yes, on Friday the 13th in October, there is actually a negative correlation with that day. Now, that doesn't mean it's going to guarantee happen, but imagine if you saw a setup and you thought, oh, maybe it is bearish. Maybe that's my technical system. Well, guess what? The stats actually go along with you on that. And it turns out that it's happened quite a few times before. In fact, on this chart, you can see the average returns and you can see the October returns here for the Spooky Friday. Again, just another way of presenting that data or information. Let's have a look at the bull market hopes though. Well, S&P 500 was pretty bad in 2022, as we know. And when we tend to have really bad years, we have really good returns when we come back out of it. Funnily enough, we're actually behind the average. Usually the average is 37.7% for the entirety of the first year. And that marks us to be around, I think it's somewhere around 13, 14%, whatever it is, around the, behind, I guess, the average year. So really, 100% of the time we've seen positivity, and generally we see a second year return that averages around 13.5%. We are not seeing that right now. So again, will the bulls come back into the markets? That's something we're looking for. Now, we mentioned the smart money versus dumb money charts before and how we saw a little bit of a dip in smart money recently. At the same time, we started to see some weird transactions occur. And we mentioned this the first time around 2 days ago on the channel. So if you're interested in following this stuff, remember to subscribe, smash that alert button. And of course, we cover this every single day of the trading week. So smart money was basically saying, you know what, I'm kind of going to take a little bit of profit. At the same time, what were we doing as retail traders? Hey, let's pile in. We now see the turn. We're feeling pretty positive. And this is kind of the common thing that tends to happen here in markets. Do we think we've put the low in on markets? Well, in some ways, it seems like we have. The bullish percent index obviously has been increasing at a nice rate. But you'll notice in the past, we see something like this occur. We see an increase, we see a few days of down, and that kind of gives us that buy the dip style concept that comes through. I like to think of it as more it rolls out people and then obviously gets a whole bunch of extra shorts and liquidity trapped into the short. It could make a new low, and we'll be covering very, very closely. But there are some signs saying with the dark pool transactions that somebody believes there's a little bit more short to come, and maybe that's got to do with Friday the 13th. Let's have a look at Goldman Sachs' opinion on oil. In fact, they see that if production drops below 2.5 MB, they believe that crude oil is going to go to $100 a barrel. I just thought I'd kind of share that over here because it's an interesting kind of thing that they're coming out with. What are the catalysts that we could be saying, oh, well, maybe the market will sell off? Well, guess what? We've got BlackRock, we've got Citi, and of course, we have Wells Fargo. These are all expected to kick off the big earnings season, and this is where it's going to matter. We need good earnings. And I think it's 4 of 6 of the big banks are expected to kind of give us kind of poor earnings. So that's interesting that the street believes that at this stage. Wells Fargo is expected to move between 6 and 7%. And then, of course, Citi is also 6+%. So do expect that there is going to be some volatility. And I expect this to be a fairly volatile, basically earnings season, with many companies showing us a varied results depending on where the economy is strong and where the economy is weak. We'll continue to update you with the options expected moves as we go. What about US Treasuries? Well, everyone's freaking out about them, and rightfully so. That was a terrible 30-year auction, there's no doubt, and it's probably going to get a little bit worse. But are we already pretty sold off? Well, the answer is quite simply yes, 2 standard deviations below. Now, I usually say with Treasuries, they're not really a great trade. They're just more of an investment vehicle for a lot of people. But when you're 2 standard deviations away from where you should be to the 200-day moving average, usually that means that you're starting to form some structure. And we've kind of talked about how the other day we might have seen the low. We obviously rallied off that point and we've sold off since then. But, this sell-off was pretty fast and pretty, quick. And obviously it would be freaking quite a few people off. Now, is it expected? Well, the simple answer is yes, it's expected. In October, we expect somewhere around the middle, which is where we're at right now, to see a little bit of weakness in pre-election years and then see strength over the next kind of period. Usually we kind of bottom off somewhere around the point of the 3rd week options expiration, or this is what we know as maximum pain. So there's quite a lot going on here in the markets. But again, the stats usually point to years like this. We're positive by the end of it all. And I think, you've got to have a healthy level of optimism in markets. A lot of bears out there and a lot of us that see all this news, we're like, oh man, this thing has to go down. Well, if the presentation of the price action shows you that it should be going down, then yeah, again, have at it. But just remember that the markets are kind of rigged towards the positive side, and especially when you're trading stocks. Currency a little bit differently, and of course, commodities can be different, but stocks are kind of rigged towards that upside. Let's move over to treasuries. What's going on? Monster transaction, guys. A huge one near the end of the day. And this monster transaction shows us kind of what we already have been expecting, which is somebody is liking treasuries and somebody hates them. Because, of course, with every buyer, there is a seller and so forth. I would say that someone is trying to accumulate a position down here, but we're not sure on that exactly just yet. But if we make a new high, if we go through where we were just a day ago, I'd say that's a very positive sign for investors, for swing traders, and of course, for just generally momentum to be on the positive side. Now, this is where things get a little bit negative, and it has to do with dark pool transactions on the ultra short queues. Now, a lot of you guys love SQQQ. Well, guess what? Someone went in hard. Whether that's some kind of weird backwards take profit or whether it's someone pricing in for a nice little quick move, it tends to be that big funds will go into these leveraged index ETFs and they'll do it only generally for quick profits. So we're looking for large transactions in and we're looking for large transactions out. A very interesting point in these markets. Let's move over now to the options market. And first up, I just want to mention it was a massive one. We expected it to be big. It was higher than average. And funnily enough, look at that, more calls than puts. And then we go down. Of course we would. So retail traders were buying into it, even though we had a CPI inflation number that showed us that the core was up a little bit in shelter. And of course, we had about 3.7% overall instead of 3.6. And I think in the previous video, we mentioned Everyone was 3.6%. No one was anything else. Take a look at these treasuries, though. There is so much action going on in TLT. Down 2.7%. 542,000 calls, 212,000 puts, 2.89 standard volume. There is a lot of transaction going through there. We also saw a huge amount of unusual activity going through quite a few things. Nextra was another one that we've seen transact a lot recently, which is obviously that utility stock. And we kind of think we found a base on that the other day with that strong recovery that we've seen from that. And even Zoom video comms, over 1 times. But this is something that's been forming a little bit of a base for a while, and it's coming down to a much more attractive level. Some other notables were things such as just the Qs, the S&P, and the Russell 2000 finding, look at the puts. Wowzers. That's a lot of puts. So everyone going negative on the Russell. Hey, I don't mind at this price realistically. It just depends whether we get some nice structure forming. But we seem to be starting to say, well, maybe we are seeing the lows for the Russell 2000. Interesting that everyone's going puts all over it. Let's move over now to what was doing poorly and well over the last 24 hours. And quite simply, semiconductors held up better than you would think. 0.51% up. And the worst sectors were things like actually metals. We saw metals do really poorly. Utilities gave up some of their gains. And it was just kind of like a broad sell-off through most of the sectors, except for technology, except for semiconductors, which were doing much, much better. When we have a look at the 5-day running average, still gold is number 1, but you can see here solar also doing well, still holding up, utilities still holding up, and semiconductors now going back to number 3. So really the core base of what is the strongest in the market right now is still holding up even during the sell of the last 24 hours. Let's have a look at yield inversions the opposite way. Of course, this is where we expect if yields go back below 1%, we've got some problems. And at this stage, we're just sitting about 1.08. So nothing changes there. Where things did change was these big spike ups of the 10-year, big spike ups of the 20 and the 30-year. And we'll need to be watching those quite a lot on the charts moving forward to make sure they're not making new highs. Because this is okay for it to happen, even though it was out of control in some ways during the session. But what we need to see is next week, how do these bond auctions continue to go? Are they being allocated at those higher rates? That's going to be a bit of an issue. And I think that the market is kind of moving into almost like a buyer's strike. People are saying, you know what? I don't want to buy them at that rate anymore. I want a better deal. Well, that's something we haven't seen for a very, very long time, especially when it comes to US government bonds. Let's have a look now at the old Fed and what's going on with central banks. And you know what? They just keep injecting. There's no doubt that something in my mind broke behind closed doors. And why is it that this green line, which is effectively the Fed, why is it that it is going back up even though the market's going down? Oh, we're tapering. It's okay. We're doing all these things. Yeah. All right. We know what's really happening. You're sneaky. You don't want this market to go down. And you keep just switching the game plan when necessary to make it kind of look a little bit better. So again, if this keeps going up, then as we come back down, we have to kind of expect somebody to probably place a buy into it. And I think that is a problem. Let's go over to the VIX now, 16.7. Volatility did spike back up, but not really that much. The MOVE index is one that you'd be looking at. And of course, again, we didn't really see a huge spike in bond option volatility, so something to keep in mind during all of this. Treasuries, everyone's not happy about what happened with treasuries. Look, treasuries came back to a key little point where I could see somebody taking some resistance. We had a box here from previous where we thought it might find some buying pressure. It sold off, came back up because there was some structure here. That's going to be the sell point. In fact, with treasuries, they're coming back to a point again now where if the lows are going to hold, somewhere in here is where treasuries will need to find a buy. But they definitely had a struggling 24 hours. There's no doubt that no one wanted these long dates over the last 24 hours. Copper, again, not really finding the strength here. We saw that stimulus stuff coming out of China. It didn't hold copper up. And basically, copper's still sitting on the demand. So unless it breaks through this trend line, I'm not feeling that positive on the copper. Therefore, the metals kind of stagnating at this stage. Dow Jones Transportation Average, that was down again, and we expect that. Nice little pickup, though, into the back of the session. Again, nice sell-off there. Realistically, it's kind of what you would hope for. This one was pretty deep, though. Home builders. Now, home builders is a problem. If this gets underneath the low, yeah, that's going to be an issue. We had that alert set for where we thought buyers would recommit. At this stage, right back down. That was a pretty brutal sell there. 3.78% on the day. Something to watch. Home builders, if it goes to a new low, maybe we won't be so certain about the markets not going a little bit lower later on. I'm certainly using this as a lead at this stage. Semiconductors, very strong on the sector. I got to say, it filled the gap. Okay, nice. Came back higher than I thought it would. Somewhere in here is where I thought it might find some weakness. It's the best sector in the market, always has been. So the thing with this is it's very hard to sell. But if it's going to find some weakness, this would be that area, even though it is above here. I think, though, it would be weakness into strength at this stage. And yeah, that's just based on what we're seeing so far. And of course, we'll change that if we need to with the available evidence at the time. Let's move over to the US dollar. It held the lows and just moved back up. You could argue it made slightly lower points, but in general, I would say the trend is still, up, I guess, for the dollar index at this stage. And I would say it's in distribution. I think this is a critical level for it. But yeah, the trades aren't that easy on the dollar at the moment. You're using the euro, using the pound as proxies, and there are some definitely good trades there. In fact, we saw an absolutely excellent trade on the euro yesterday. It was a fantastic one, part of our private community stuff. Great trade. Always opportunity out there, guys. Always a lot of opportunity. Now, here's gold. It went through our initial level where we thought it would find weakness. Then, by the end of the session, boom, there goes the shooting star. And of course, this comes off that previous level of support resistance, and it marks like a weakness period. But what I'm going to do is I'm actually going to set an alert above here, because I'm actually still bullish on gold, and I still think that we might have seen that kind of high rate level. So what we're looking at here is that if it goes back above that level, we could continue to see squeeze for gold. Now, at this stage, of course, I'm going to say question mark. I don't really have a strong short for it in here. I was looking for more structure creation through this point. We just didn't really see that. Some people just try to short the shooting star. I'm not going to do that. That's up to you. You do whatever the hell you want, of course. But that level there, it's not enough just seeing a shooting star, even though it's a key critical role reversal. I like to have 4 to 5 confluence reasons whenever you're kind of placing anything. Let's move over here to GDX. Now we can see at this point, we get that kind of rally. Then we're seeing a little bit of a drop. I still think positive for GDX. I'm looking for a bit more of a sell-off in that pair. It was an engulf to the negative side, so that's important. XLE struggling around the middle of nowhere land. Tesla. Now, Tesla came down. It broke below this. Now, I was mentioning that we had this kind of ascending channel on it, and we did get below. We haven't actually seen a swing towards the short yet. Some people say, I knew it would short up here. Sure, but possibly. It depends on your system. At this stage, though, I would say no swing traders are really in the short just yet. So the market is still up. You're still looking at that 250 as the important point. We've mentioned that several times. For shorters, they're probably trying to take profit around that 250, 252. But if we get underneath that level, we might be in some trouble with Tesla, and we'll talk about it soon. The biggest stock in the world. Now, this was one that was interesting. It held up 0.51%, managed to put in a high here, which we've been looking for. Alert was set, alert was hit. So this is where we expect kind of like a turning point here for markets. And it's basically a point where, when you're talking about Apple, you're talking about the biggest stock in the world. If markets do pull back, again, it's kind of showing us that I would say there is some strength in this market at this stage, and that was a good sign for it. So we'll be looking for pullbacks. Disney, on the other hand, it's just kind of floating around this key zone. I'd like to see it go higher. It hasn't done so yet. We'll find out whether it can. Utilities, still really good. We've liked utilities for the last couple of sessions, and I would expect to pull back into strength at this stage. Those volumes, they're just massive that we saw last week. What a great level. Now, ARK is the one that I think is very, very key. Hypergrowth stocks and small stocks, this is exactly around that level. We mentioned it in the last video, somewhere around in here, 38.50, 39, that kind of zone is where we thought there may be a buyer. Now, we haven't seen it yet, so we'll obviously pay a lot of attention to it. But this chart is probably one of the small time frame charts that I'm really paying a bit of attention to at the moment. And when you go out, you'll see what I mean. Not only do I have my most traded level through here, but I also think that we have an interesting base formation for quite some time. And this marks into a overarching kind of base across Russell 2000 as well. So I think this is a very interesting point for it. Australian market, as we mentioned, we think that it's a bit bullish here. Pullbacks to be met by bull demand at this stage. And the US 2000, that was a horrific sell. and it was pretty aggressive too across the board. And I'm not sure if it will find buyers here, but obviously this is a point where I do think that there will be somebody saying, well, you know what, I'm still keen on this. I've still got that 1810 as a key critical level, and I'm watching ARK as well, along with some other small hypergrowth stocks to see whether we actually are basing off on the small caps, because small caps probably offer the best opportunity in the future for, percentage gain anyway, because of course we've already seen the big majors, Google, Apple, Microsoft, all of those have really good recoveries. Actually, I missed oil, so I just want to mention with oil that we did see a little bit of a rally coming off that low, and it was okay, but it hasn't got through this level again. Even though Goldman are going on about $100, I still think somewhere around 89 to 90 is where the bears sit. And at this stage, I think there's kind of like a possible bull action here. I don't really like the trade hugely. I mean, I'm mostly negative on oil at this stage, even though everything that's going on in the world would make you say, well, you should be positive on oil. Yeah, well, we'll see about that. I'm not that strong on the overall underlying arching kind of Chinese economy, to be honest. But over here, we've got oil, and yeah, it kind of put in a pretty bad day. I would say that around here, though, is where the buyers are if they're going to be there. Chinese stocks now are pullback to be expected. You get that kind of rumor stimulus thing going on, pullback. Ideally, we find a buyer there soon. No new low would be ideal on that market. And then we move over to the NASDAQ. And this is where we get into structure. So we did see a little bit of a lower low getting formed here on the NASDAQ. As you guys know, I prefer to see the S&P 500 as the read. So let's have a look at the S&P 500, and it will all dictate back to the NASDAQ anyway. So we see here kind of like a double topping event by the S&P. Some people will call it that. On futures, we got that new high. We didn't quite get up to that 44.02 gap fill that we had, that we were talking about. We have come back down to this green line here that I've got, and we've seen this now bounce twice. So I think selling below there is going to cause, quite a lot of further sell-off, possibly another 50 points, maybe even 60 points or so. And I would expect something around in this level where that 20 moving average here is in the 2 hour to be a critical point. So if we go down to the 15-minute, you can see where that sell came in, that flag from the previous session, which is in here. This is where I would expect if sellers are going to come in around 43.75 to 43.80-ish zone. That's where I would expect the sellers over the next 24 hours. I kind of think we should recover. Maybe we'll get a gap open. And then if we do sell, that's probably where the sellers are going to be trying to present themselves, looking towards that downside 42.50 or so. If we get lower than 42.50, well, then we can discuss the bear case scenarios. But in this case, I would say something around this 42.75 to 42.50 structure is where the markets could be heading. And that's kind of like what I would like to see Spooky Friday, the Monday, all of those types of things. At this stage, anyone that bought that green, not too bad. Good level for you on the small time frames. But the sell, look, we expected this. And with the dark pool transactions the way they are, the SQQQ, all of these types of things, it kind of marks there might be a little bit more to come. Again, price action will dictate that. Now, Bitcoin, I mentioned this trend line and then it went straight through it. It hasn't swung trade down. 26,000 would be where the swing is. So 26,000 is the key zone there. 29.5 to 30K is still the ultimate bear zone. And this is kind of like where I would see bulls on the temp. But if it gets below there, then I'm going to turn to the bear and I'm going to say, well, you know what? I think this is actually going a little bit more negative. I've been pretty negative on Ethereum, and look at that, took a new low. Now, that doesn't mean I want to short Ethereum. I really don't. But I don't think this chart looks very good. I'm expecting if Ethereum is actually strong for it to make a massive V shape. I want to see strength coming out of the game here on Ethereum because this chart sucks. And unless this chart actually finds some kind of real buyer, like right around here, which is where I expect people to short all of it, they're going to be shorting all over the place right now, unless they want to squeeze them out. And we should see that in price action. I'm not too confident either way, but I still think the chart looks terrible in general. Let's talk about news. There's not too much news coming up now. Prelim UOM consumer sentiment. We already saw the CPI. Obviously, it came in 0.1% above. And for now, I guess this all comes back down to what is going on with earnings. So make sure to subscribe and set those alerts and get everything ready because this is earnings season. It's where it matters. It's October, which tends to be that turning event. And we have maximum pain coming up, which is going to be a huge deal. VIX options expiration, maximum pain, and of course, a whole bunch of put premium that's on the line. So make sure to subscribe, guys. We'll see you in the next video, and thank you so much for watching. Bye for now.